This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be doing a very quick video tonight, just going over the data and the SPY technical analysis for November 26th, 2025. And with that said, let's get straight into the data. But I do want to say happy Thanksgiving to everyone who celebrates it. I hope you all spend plenty of time with your family and friends. That will be on the 27th. And due to that, there will be no market again on Thursday, and Friday will be a shorter market session, so it'll only be open until 1 p.m. So, all right, with that said, let's go ahead and jump straight into the data. Now, we had a lot of really key data come in today. We had a lot of missing September data. So we had the EPI, the core retail sales, a lot of really important data. And what this is still showing us is that producers are weakening. Okay. What that means for the inflation story is that inflation cannot be passed on to the consumers. The tariff price increases cannot be passed on to consumers. And what that ultimately means is that retailers and, all businesses are going to have to start drastically reducing prices. And I was having this discussion with one of the members in the group earlier, and they were talking about how retailers were reporting strength. And I think this is a very large misconception right now is that retailers are reporting strength. That's not entirely true. We're seeing Target, we're seeing Kroger, we're seeing Home Depot. Many of these big name companies are struggling and putting forth a guidance showing that concern not only going through quarter 1 2026 but going into quarter 2 2026. That's a major concern. Now, the misconception here is that we see retailers like Kohl's, Walmart, they're doing exceptionally well. Well, they are the retailers that are capturing the population that want lower prices. Even in Walmart's guidance and their earnings and everything, they were discussing how they're able to capture a very large customer base right now due to major discounts, and they're able to discount their stuff by roughly up to 60% right now. um I won't go into the whole macroeconomics of things in this episode, but I just wanted to kind of point that out is that um Walmart is built to absorb a struggling market. Okay, Walmart is built to capture pretty much all of the population. So when the middle class and upper class are starting to have that strain on their incomes and everything, um, Walmart will see an increase in their sales. Kohl's will see an increase in their sales because these companies are specifically built to handle, any income levels. And so yeah, I think we are not seeing retail strength. We're seeing retails retailers that are built to see strength during weakness, seeing strength. And that should be a concern. Walmart always does very well during major recessions. You could look through their long-term charts and everything. They're one of the ones that do extremely good when everyone else is crashing and burning. So I don't take that as a good sign. I take that as Walmart's picking up in sales because people can't afford anywhere else. And that's very much true. We're seeing the consumer confidence drop to seventh month lows, and the previous print before that was during the whole April correction when the market was quote unquote somewhat crashing. Okay. Uh The CB consumer confidence being at these levels is extremely, extremely concerning. And I will pull up the chart actually. All right, and pulling up the consumer confidence. This is again the Conference Board consumer confidence measure. Um, this is the 5-year chart, but I'm going to show the maximum chart in a moment. But from the 5-year chart perspective, here's COVID. Okay, here's when COVID really started to kick off, and you know, we saw pretty much the labor market crumble almost instantaneously. Um, the consumer confidence back then was at 87. The consumer confidence during the print, during the April low in 2025 was at 85.7, and today's print was 88.7. Now we're still quote unquote above water. Okay. We're not nearly at the 2028 levels or, I would say 2028, 2008 or 2007 levels. But look at the trend, okay? If you were to cut the screen off right here and look at this trend prior to that, it's all hundreds. It's 90s, climbing up into the high 90s, low hundreds, climbing up into the 110, and then all of a sudden you start seeing this deterioration. I said that wrong, but we're gonna live with it. So it goes to 99, then it goes to, sorry, it's kind of hard to get these lined up. And then it jumps to 87.80, then it drops to 75, and then it really starts just absolutely dumping. Okay. Um, there's the dot-com bubble crash, or there it is right there. Um, there's COVID. So we're starting to get to very concerning levels, is what I'm trying to say. And generally, these downtrends are something that don't pick back up. You had this period back in the 80s where you were starting to see that downtrend quite a bit. But we're even lower than that period, and then it started to pick back up. And I think that's what many are looking for. I'm not expecting that at all. I think with the crumbling labor market, and we'll go back to that in just a moment, but the crumbling labor market and all the many concerns that are going on with the economy right now, I think that this is kind of just the beginning of this major, major downtrend. Um, I've been really kind of raising the alarm bells on this that this can get very bad very quickly. Um, I think we're just kind of seeing the start of it. Now, I do want to go to the CME head watch, and again, this is just climbing each and every day. Yesterday, I believe in yesterday's video, if I remember correctly, it was at 80.9%. Today it went up to 84.4%, and when I I can't talk tonight, refreshed the page, it jumped up to 84.9%. So, it is actively pricing in a cut almost every hour. So that's kind of cool. Again, this isn't really a mystery to us. We've been fully anticipating this 25 basis point cut for, the latter of last 2 months, I want to say. Um, I did not believe for a moment when the Fed was extremely hawkish the last week and a half, and the odds for the rate cut just plummeted. Um, I I, I thought that was a total folly. So yeah, this is great. The odds are just increasing each and every day, and the likelihood we will get our 25 basis point cut is very, very likely going to be around that 98%, closing on the week of the FOMC. Now, I do want to go back to the data sets for a second. And the reason why I wanted to go to the data sets is because there's actually two things that were pretty major here. There was the ADP employment change weekly, and again, this is going to kind of be like the non-farm payrolls type thing. Um, this is showing a massive downturn in the weekly change. They were expecting it to be around, I don't see the forecast amount. I believe it was expecting to be a positive this month. But now it's a negative, negative 13.5 thousand. So this trend is continuing to remain very, very weak. Okay. The second one, and I'm going to get into that 5-year note auction in a moment, but the second one is the Atlanta Fed GDP. We're starting to see this now pull back. We're starting to see this pull back from the 4.2% again. Um, it came in at a 4%. Now, this does come out every single week, I believe. So we will be seeing this shift up or down depending on the whole sentiment and everything. But this is slowly starting to break that upward trend. Okay, but we do need to see some continuation in that if we're going to really say that we are going to be seeing a downtrend in this data set. Now, what I'm really excited about and what I didn't anticipate was the 5-year note auction coming in with a lower yield. Okay, and actually went over the auction results. Sorry, my mouth is like randomly just watering. I apologize if I sound like a dog. Um, a majority of the notes were sold at a 3.4113%. Okay, so basically a 3.4%. That's super good. That is super good. Um, if you remember the last two videos I discussed, the 5-year note, I was expecting it to come in basically at that 3.6% or slightly higher. I'm actually very surprised by the results, but at the same time, not really. Um, we absolutely should be seeing a lot more strength entering into the bond market, and this is kind of just more confirmation that we're right on path. Um, so yeah, I thought today's data sets showed a lot of interesting results, and it showed that we're really not out of the woods. Okay. Now, going into tomorrow's data, and again, tomorrow is a major data day as well. There's no data for Thursday and Friday, so they're really just packing it all into, Tuesday and Wednesday this week. So, going over the time frames, at 8:30 we have a lot of the PCE, we have GDP data, GDP price index, durable goods orders, core durable goods. That's when we have the jobless claims, the initial and the continuing. So the 8:30 a.m. time frame is very, very, very important. There's a lot of data in there. How you're going to really know if this data is good or bad for the market is two different indicators, and we'll talk about that in just a second here after we go over the rest of the data. But um, that 8:30 time slot, very, very important, but don't be overwhelmed by the data. There's a very easy way to determine if this is going to be a bullish or bearish day based off of that. Aside from just looking at the market price, because that can be misleading at times. Going over the 10 a.m. time slot, we have some more core PC price index data, and this is from September. New home sales data from September and the month over month. We have PCE price index, another September reading. This is not the core one though. This is both the core and the standard. We also have the personal spending. That's going to be a really important data set. Uh, I haven't correlated that to any charts or anything like I did with the consumer confidence, but I'm pretty sure there's some stuff we can correlate the personal spending to. They're expecting a pull down in that by 0.2%. I don't really disagree with that at all. We might see it pull down even more than that. So definitely look out for that data set. Now, at 11:30, we do have another Atlanta Fed GDP reading. Again, we had it come in at 4% today. So they're expecting and anticipating a 4% tomorrow. Um, I would say I would expect that as, really nothing changed from today and tomorrow unless we see the data come in extremely dovish in the morning. Um, and then at 1 p.m., we have the 7-year note auction. Uh, my anticipation is obviously we're going to see the yield pull down. Now, kind of the same thing with what I expected out of the 5-year note auction yesterday is that out of the 10-year and 20-year note auctions we saw, they came in slightly higher yield. The 20-year came in, I don't remember the exact rate. I want to say the prior auction was at a 4.5%, and this one came in at a 4.7%. So, can we see this basically, be a very neutral auction in terms of the yield? Absolutely. Can we see it pull up very slightly? I think that's not out of the question at all. It really just kind of depends on the whole bull steepening between the yields. So just be aware of that. That this may not pull down as many anticipate, but again, kind of with the 5-year auction, we might be surprised. We might see a 3.67% type auction. So very, very large data set, even though a large chunk of the stock market is not paying attention to the auction specifically. And at the 2 p.m. time slot, we have the Fed's Beige Book. Now, again, I highly suggest every single person listening to this video always read the Beige Book. If you're not going to read it word for word, because I know it's not easy to read sometimes, these can be 40 something page, uh, you know, readings. So, what you do is you grab the overall summary, you slap it into an AI, and that will tell you the basis of what the beige book is covering. Okay, and that's really going to be good enough. Because what the beige book is for is it's really a good indicator of what's really happening on the ground. And I've covered this in many, many videos, probably hundreds of videos at this point. Um, the beige book is when each of the Fed districts goes out to local businesses and discusses the hiring, the firing, how the consumers are doing or not doing, how much inventory they're buying, blah, 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 blah. They're trying to get a very just on the ground um, reading for, the whole labor market and the consumer market. So, you get a very real result within those readings, because it's each district, and even though the summary is obviously going to cover all the districts, you can specifically go into each district and read through it. And that's what I personally do. I will read through the entire 40, 50 page, beige book, each and every report, because, I'm very interested in the macro of it all. So, I know not everybody is, but at least reading the summary is going to tell you if there's further weakness in each or any of the Fed districts, or if there's starting to become layoffs, or, starting to see an increase in layoffs, starting to see an increase in reduced headcounts, just very, very key data for the labor market and the consumer market overall. So I highly suggest going over that. Um, Even if you just simply, again, copy and paste the summary into an AI, tell the AI to, summarize it even more, and you'll have a pretty good result. So, um, The two indicators I wanted to go over for the pre-market data is basically the VVIX and looking at the US 10-year yield. Okay, and you can look at the other yields too. I know many look at the 2-year yield. It's all kind of the same thing. If one of the yields are going to be pulling down in this current cycle, all of them are going to be pulling down. So if the data is going to be bullish for the market, then you're going to be seeing the yields pulling downward. If the data is going to be bearish for the market, then you're going to be seeing the yields pull upward. Now, there is still the whole, I don't want to say concept, I can't think of the word right now because I'm tired, but there is still the whole correlation between the yields dropping and having a actual major correction within the equities. And we'll kind of discuss that maybe in the TA section. But that's not something you have to be too concerned about right now. Um, that's more so when we start breaking below the 3% range on some of the longer yields. So um, currently, the yields dropping is bullish for the market. So that's the data. Again, no data on Thursday, really no data on Friday. There is the Chicago PMI at 9:45 a.m., but that's not going to be very important for the trading session since the trading session is only until 1 p.m. anyway. So enough rambling about this. Let's get into the technical analysis. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis, as always, let's turn on the daily time frame and the moving averages and Bollinger Bands, and we're going to go through this pretty quickly tonight, okay? We had a very strong, I don't want to say buying day, but we did have a very strong buying day because obviously it's green. That's what everyone's going to correlate it to. Um, we did see a strong buying day. We saw the market low from or go from 664.48 all the way up to 676.21. Um, obviously that's a bullish day. Now, with that said, we still have some very key levels being tested in here. We discussed how either the market was going to head upward from that 5 mile range or head downward to the lower Bollinger, and they obviously did head upward towards that 20 mile range, and we are still technically at that 20 mile. We closed at the 675.02. And with the 20 mile being at 673.11, technically we're still within the upper bounds of the 20 mile. Now, the overnight session does have us a little higher. We're currently at 677 in the overnight. Um, I will correlate that to a chart in a moment. Uh, but we're not done with the 20 mile yet. Okay. Main reason why we're not done with the 20 mile yet is primarily because of the 5 mile. As long as the 5 mile is below the 20 mile, the market is bearish. Okay, even if you're buying all the way up to the upper Bollinger, you have to be very cautious when the 5 mile is below the 20 mile. Now, the 5 mile will be pulling up tomorrow, as we did have a very, bullish day. I wrote down on here, I believe 667.80-ish for the range for the 5 mile tomorrow. It might be higher, it might be lower. Just make sure you mark it down on the open because it's going to be a very key range. Um, we're still below the 20 mile with that. However, the 5 mile is starting to pull towards the 10 mile level and slightly above it. Okay, so be aware of that. Is technically that is one of the signs of crossing back into a bullish trend is that the 5 mile will be pulling above the 10 mile. So if we see strong buying tomorrow, then that trend will continue. The 5 mile will be probably about 2 to 3 sessions away from pulling above the 20 mile if we continue trading at this very, high range of the 675 plus, basically above that 20 mile. And I'm not saying high because of price, I'm saying high in terms of the moving averages currently. Now, we still have to have a very quality 5 mile test after testing the 20 mile thoroughly. So we're not done with this range at all. I'd be very, very surprised to actually see this continue buying up too much further. And one of the primary reasons why, and I'm going to turn off the Bollinger Bands and the moving averages for a moment so that we can see this much more clearly, is the upper consolidation channel is literally right where the market high was today. Um, no, I did not edit this channel after the fact. I've had this channel here for multiple weeks now. You can check through the previous videos, but the market high today was at 676.21. Okay, and that's literally right where we have our channel. Um, which means that we could be building into a very, very potential rejection here. Okay, because again, and I've been really parroting this point quite a bit recently, but when we're in a consolidation channel, we very, very much so will be trading from the bottom to the top or the top to the bottom. Now that we're at the top of this consolidation channel, technically we've closed a minor cup here. Um, there is plenty of reason to actually pull down and retest support. Okay, so I would not be too much, I would not be too bullish at this range here. Um, Again, kind of going over what we said in last night's video, there's a ton on the upside to break here. We have to go through all of the moving average tests again. We have to go through the prior buying channel bottom. We have to go through the consolidation channel top. We have to buy all the way back up basically to the prior um, one of the prior highs, which was at the 685.45, close that cup, and that again is going to be testing the upper bounds of or the upper range of this selling channel top. So there is quite a lot of walls really to test up here. Um, Not saying that can't happen, but the likelihood, and especially with all of our moving averages underneath us right now, the likelihood is saying that we're going to be coming back down to retest our 5 mile moving average very, very, very soon here. Okay. Um, we have not had a real quality 5 mile test. We did have that day where it kind of flew through the level. Um, but again, we did discuss how that was a weird gap up and gap down on the actual 5 mile itself, so it's kind of hard to justify that as a full test. Um, but we are starting to get back to that, the 5 day period. Again, this is a level that's expected to be tested every 5 days or less, but on average, it's every 5 days. So with us testing it, even on, um, you know, Monday, last Friday or this Monday, um, we're starting to have range to get ready to test it again. Now, it is consolidating. It is pulling upward slightly towards, again, the 20 mile and towards the top of this consolidation channel. Um, but there's a lot of reasons to come back down and test it. Again, once we go through the 20 mile, that basically opens up the room to retest the 5 mile. And from that 5 mile retest, that opens up the upper Bollinger if we're going to push into the upper Bollinger or back down into um, testing the 10 and heading back downward and pushing further into our major selling channel. Now, going over the 4-hour chart very, very quickly. I don't think I'll see anything on here that is too concerning. We just have the cup filled right there. Um, this is not going to look like it too much, but you do have a inverse head and shoulders right here for liquidity. So if there is going to be a further push, there is a little bit of room to do so. But again, there's still quite a lot to push through. So just be aware of that. But if they're going to push for that bullish push, you really want to look for that cup close all the way back up to the 686. It's 685 and some change, but we're just going to call it 686. And really, that's what you're looking for the bullish upside. But with this consolidation channel topping right there, again with the buying channel bottom being right there, um, there's plenty of reasons to come back down. And even being bullish on this right here, with this being a cup, we should be anticipating it to pull down to form a handle. Okay. So whether you're bullish or bearish, we kind of really do expect it to pull back a little bit. Okay. Um, yeah, that's going to be the SPY technical analysis. Um, very, very quickly, I did want to show the US 10-year yield. It did pull below the 4% today. So we're finally starting to break back down into that 4% or lower territory. And again, this is a large reason why we will be getting the 25 basis point rate cut. We're seeing that with the 2-year. We're starting to break new ground basically ever since the rates were hiked with COVID, in 2022. So we're breaking new ground on the 2-year. We're breaking new ground pretty soon here on the 1-year. This is seeing slight bull steepening, but very likely it will be seeing, new territory broken very soon. The 30-year, it's still in a downtrend. It has struggled a little bit, but it still has a little ways to go before it starts really breaking major downside. We saw it pull down all the way to the 4% back in the end of 2024, but that was really when there was that major um, uh, yen carry trade blow up. So if we get some crazy crash like condition, even though there's plenty of those in the market right now, we definitely could be seeing the yields basically dissolving. That's really what I'm expecting is for many of these yields to really just kind of tank pretty soon here. Um, so yeah, that's tonight's technical analysis. The last thing I did want to cover, and I'm not going to do a TA on Bitcoin or anything, but just as a major reminder, um, Bitcoin is pretty much 99% institutionally controlled. Okay, it is controlled by BlackRock, major dealers, major brokers, major firms, big money, governments. It's not some decentralized, online fund currency anymore. Okay. So when you're seeing Bitcoin continuing to sell off when the market had a very bullish day, to me that's a concern. I feel like that Bitcoin kind of reflects the true, I don't want to say market value, but the market trend because it's just so institutionally controlled. It's pretty much algorithmically controlled 24/7. Um, you know, uh, yeah, I've discussed this plenty of times in the past. Uh, Bitcoin trend is really something you want to listen to. If Bitcoin is still continuing to sell off when you're seeing somewhat major buying within the equities, then for me that's a concern. That might be telling you that maybe this isn't the bulls buying up all these stocks. Maybe it's the short positions getting ready to reload for that next leg down. Um, so just keep your eyes on Bitcoin, keep your eyes on the dollar. We did see it pull down slightly, but again, we are within a very bullish structure here. We do have this very nice cup and handle, and that can send us upward. I know many are expecting the dollar to pull down further. Um, I'm actually on the opposite right now, even though I don't like being on the opposite. I am seeing the room up to the 102. I believe that the market will be seeing that head upward as we continue to see this collateral crisis unwind, and we're still very much so within it. If we weren't, we would see Bitcoin being bought up very aggressively. We would see um, a lot more buying in much different things within the actual equity market, and we would not see so much weight being pushed into treasuries. Because remember, if there's money being put into treasuries, that can't also be put into the stock market as well. So, okay, that's tonight's video. And that will be the video for, the rest of the week because I won't be doing a video on Thursday night. So I hope everyone enjoys their Thanksgiving. I hope everyone has a great weekend. I will talk to you all on Sunday in Sunday's video. Thank you all for watching. I appreciate each and every one of you, whether you're subscribed or not. I am almost near 1,000 subscribers, so if you could help me get there, that'd be super cool. Um, but regardless, it's fine. Thank you all. And yeah, have a great night, have a great day, trade safe, and if this is going to be a major bear trap for SPY, just be really cautious. I think it's going to be. Um, I'm not seeing the full signals that we're out of the woods yet. We did see the VVIX pull down to the 96 today, so make sure you're watching that very, very thoroughly tomorrow. If we see that start pulling above the 98 range again, then that selling will start to pick back up. We will reject back down into the um, consolidation channel, and that will very, very likely tell us that we will be um, selling off down towards the bottom of that channel. All right, have a great day, everybody, and have a great night.